from the CUBE studios in Palo Alto and Boston, bringing you data-driven insights from the CUBE and ETR. This is Breaking Analysis with Dave Vellante.
30 months into the Gen AI awakening, the jury's still out on how much enterprises are benefiting from investments in artificial intelligence. While the vast majority of customers continue to spend on AI, reported returns, they're really no greater than, and frankly, they lag those typically associated with historical IT initiatives like ERP or data warehousing and cloud computing. Let's face it, the multi-$100 billion annual CapEx outlay from hyperscalers and sovereign nations now is fueling the euphoria and supporting what some consider really blind faith in the AI movement. But the ground truth returns from enterprise AI adoption, they remain opaque. This, combined with geopolitical unrest, fluctuating public policy, and GDP estimates that are now in the low single digits, have buyers depressing expectations for tech spending relative to January of this year. Hello and welcome to this week's theCUBE Research Insights, powered by ETR. In this breaking analysis, we bring in our friend and colleague Erik Bradley from ETR to review the latest data on AI adoption in the context of overall IT spending. We're going to drill into some of the dynamics of AI usage and give you a small glimpse of some of the leading edge AI product research that is conducted by ETR. Erik, great to see you.
Always good to see you too. I'm stuck here in gloomy New England, so I'd much rather be doing this right now.
Yeah, another crummy weekend.
Another crummy day.
I can't believe it. So we just saw you at RSA. It was a great show, and coming off that momentum, I wanted to start, Erik, with the good news. So in the recent survey, you guys did a 600 IT decision makers. ETR found that 83% of the firms out there expect to increase their spending on AI, application development, and maintenance. That's this year, with most expecting increases in the double-digit range, which is pretty good. And only 5% expect to lower their spend in that space, application development. So, Erik, that's pretty encouraging across a decent-sized sample.
Yeah, it certainly is. I'm going to since it's the first time I think we've ever shared this data with your listeners, I'm just going to quickly explain. So this is AI product series. We're doing it 6 times a year. This particular version that we did was only about those people building and maintaining their own applications, which you could see in the subtext there. So really, really high level of spend, extremely healthy on those people. The one prior to that in January was all AI spend. So the ones just strictly buying, SaaS and also building it. But those numbers also were equally as healthy. They came in at 75% expecting an increase versus only 4% expecting any decrease at all. So it doesn't matter if you're buying it or if you're building it yourself. It's a pretty healthy spend environment.
And despite the geopolitical and public policy uncertainty, as this data shows, organizations are mostly staying the course on AI spending, despite the regulatory changes that we've seen over those last several months. Half of the 507 respondents are hanging tough or even accelerating, with only 10% slowing adoption as a result of all this uncertainty. Erik, again, this is pretty encouraging.
Yeah, it is. I love what you're doing here too, by the way. You're putting together almost 3 different survey products of ours to tell a great story. So I want to give you kudos to that. You're doing a really, really solid job here. This one is from our April 2025 macro survey, which is why you see the end get a little bit higher. And yeah, it's very encouraging. Even more encouraging, if you cut this to just IT telco companies, that last part of acceleration jumps to 40%. And then the continuing goes to 26%. So it goes from about 50 to almost 70% when you cut to IT telco organizations alone. So yes, very encouraging environment. We're not really seeing anyone slowing. They're just trying to find a way to increase the pace.
Okay, but Erik, just focusing on the middle here, the uncertainty of that fat middle, that 40% say they're proceeding with caution. It's a bit of a yellow flag, isn't it?
I don't know. We're spending so much money, and I think we'll get to it in a little bit, and we're not sure where the return is on it, that I think proceeding cautiously is good. I think that's right where you should be in this type of environment. Listen, we see the dollars are there. We see the velocity is there. We know the use cases they're going after. I'm not as worried about that proceeding cautiously, right? If you're given answer options, you're either saying, yes, I'm throwing more money at it, or yeah, we're still proceeding, but we're monitoring it. So I'm not as worried about that answer option.
Okay. Well, so it's like, to me, it's like the undecided. We've talked about this in previous surveys. So they could go either way. And so when you look into the AI ROI, Alex, if you bring up the next one, this actually injects a little bit more uncertainty in my view. Big sample here. Like you said, I'm mixing surveys, but this one's 600. So we're 30 months into the AI wave, and 27% say they've yet to see a return, and only less than 10% have seen an ROI above 25%. And as I was saying up front, most IT projects have an IRR or hurdle rate above 25% because IT generally is seen as risky. There's a higher failure rate. So I'm a little bit concerned that they haven't seen, higher rates. Now, of course, ROI is sort of this vague term, right? Then we're not talking about discounted cash flows. You're not talking about break-even time frame or NPVs, which of course you wouldn't do in a survey like this. It's just kind of a quick take ROI. But what's your take about that? Do you feel like there's a little bit, cracks in the AI armor?
I don't know if it's cracks or it's just showing how early we are. And the one that you showed there is actually from that survey again, where people are building and maintaining their own. The one where they're building and maintaining their own, it's slightly higher. So that 27% that's not even bothering to track drops down to 20. And I think that's the key here. Over a quarter of these people aren't even bothering to track their ROI right now. So that's how early we are in the game. They're just telling people to go ahead. Yes, go ahead, build it. Go ahead, try it. See if it works. We'll worry about ROI later. And everyone I speak to on a qualitative basis believes that, a lot of this isn't coming from net new budget. A lot of this is budget that's coming from other areas. And you see that in other parts of the survey. So they're coming from business lines. They're coming from sales. They're coming from marketing. And the belief is the ROI will come from there later. And also headcount is slowing, hiring is slowing. So I think right now, the truth is they're just not worried about the ROI. They're worried about building the applications, testing the applications, and they're going to let that shake out later.
Well, it's interesting because a big chunk, a quarter, even more than a quarter, said we're not even currently measuring ROI. So it's like, I think you're right. It's like, hey, we believe, let's go forward. But again, come back to that undecided, that kind of fat middle that said proceeding with caution. If you look at this data, if you bring up the next one, yes, thank you, Alex. It shows that unlike security, which is the most immune sector from budget cuts, AI initiatives are second only to outsourced IT services in terms of being, quote unquote, very vulnerable to additional cuts. And Erik, as you can see, it's behind security and cloud computing in terms of being insulated. So I guess the point is, while AI is getting all the buzz, it's not completely protected from the axe if budgets tighten further.
Yeah, interesting. Again, I think this one deserves explanation. So in our macro survey, when we sort of asked a similar question, that survey ended the day after the reciprocal tariffs were announced. So we didn't really catch the huge plummet that we would have if that survey stayed open. So what we did here is we went out and asked the same macro questions to 219 C-level spending. So what you're looking at here is C-suite only. And what they were asked was, okay, if you have to cut spend, and by the way, many of them are, over a third of the people in this survey said they will be cutting spend more than their initial expectations throughout 2025. So then we asked them, okay, where is it coming from? And I was very surprised about this too. It's so much velocity. There's so many dollars coming out of it. But when you really stop and think, if you had to cut spend somewhere, where is it going to come? It's not going to come from your infrastructure. It's not going to come from security. It's going to come from the thing that's in the sandbox right now. And that is AI. So yes, a little bit concerning that if the environment gets worse, that this train could slow down a bit. But when you really think about it logistically, it makes perfect sense. If you were the CIO, that's an area where you're not going to get in trouble for cutting.
Okay, thank you. So coming back to the overall macro backdrop, and we've shared this data before, we got some GDP forecasts for the year below 1%. So IT decision makers pretty much across the board have pulled back their expectations. You're even seeing this in security, you're seeing it in Microsoft. So it is really across the board relative to January survey. Kind of gone are the days of high single-digit budget increases back in, those disappeared with COVID. And then as interest rates, remain elevated, they increased, you should see the spending expectations came down. But I guess the bottom line is IT DMs have pulled back their budget forecast that was 5.3% in January. It's down to 3.4%. And Erik, that's below last year's level.
Yeah, it is. And I'll give another point. It's actually the biggest 1 quarter drop we've ever seen in that measure since COVID hit, the initial COVID hit. So this is a pretty big, sizable drop, and it would have been worse if the polling window was different. Again, I can't stress enough, we closed this survey the day after the reciprocal tariffs were announced. So 99% were in before that, and then the ensuing stock market crash. I think that number would have been even lower if we had the ability to keep that survey open for a while. And another thing to point out too on there, the bigger the organization, the worse that number is getting. So on Fortune 500, it's down to 2.4% growth, and the Global 2000 is now at 2.2%. So yeah, this is a bad revision. There was a lot of optimism. We were, approaching 6% growth, and it got cut in half. So we shall see. We do this every quarter, so hopefully there's a little bit more optimism. There's been a little bit of return in the stock market, so we'll see what that number is in July.
A year or so before COVID, I interviewed, I think his name was David Lovelock from Gartner, who's Gartner's, key statistician, forecaster. And he said to me, there is absolutely no statistical correlation between GD spend and IT spend. And I said, what?
Yeah.
That's a myth? And it's just my history of being in this business for decades has always been the opposite of that there is a positive correlation or negative correlation between GDP and spend. If it's proportional. Sorry, put it that way. What's your experience there?
100% agree. Listen, at the end of the day, the IT spend is there to support the business. So if you're in a bad business environment, it's going to trickle to everything. So there are certain things you have to do to keep the lights on no matter what. But yeah, at the end of the day, these people are just part of the executive team that are strategizing and planning their business models. So of course it impacts 100%. I've been doing this for about 25 years now on both Wall Street and technology side. So 100% agree with you. There is a direct correlation. So,
and Erik, while respondents, they told us earlier they haven't pulled back broadly on AI due to political uncertainty. 71%, as shown here, have delayed initiatives, cut the scope, or paused projects, or canceled them completely. Yep. So, comparatively, only 27% have accelerated projects or launched new initiatives as a direct result of policy uncertainty. So what are your thoughts on that?
Yeah, again, that's the one that's C-suite only. So when we did a follow-up, because we recognized the timing wasn't ideal, because we didn't get to capture the impact from the tariff announcement and the market drop, we went out and redid it again. So this is among C-suite level people only. And 50% said no impact, which is good, but 49% saying there was is a pretty strong number. So we shall see how long this lasts. But that 26% that said they're delaying new projects to me was the one that really jumped out. That's a pretty high level of C-suite level people that control the IT budgets telling them that they're pausing projects. So that could have a big impact throughout the year.
And, one of the things I didn't include in the data, so much data that ETR has, so you should, you want to dig into take a bath in data, get a hold of ETR because
it's overwhelming sometimes.
But there's some gems in there. But one of the things that I noticed, and we've seen this for the past couple of years, that as uncertainty escalates, we see the IT spending expectations go down and they get backloaded. There was some other data that you had that suggested that if you look at the quarterly expectations that you guys surveyed, it's a bit backloaded. And so, as you say, we'll see. I think there's underlying optimism, and I think people are just being a little bit cautious, waiting to see clarity. It's kind of like the IPO market right now. People want to go. The economy's strong, but it's like, we're just going to kind of wait and see until there's more certainty there. So, okay.
Agreed.
Let's dig into some of the new AI data that ETR has, and I'm going to start with LLM adoption. This is really interesting data. Basically, what best describes your company's plans with the following language or foundation model families for AI development? ChatGPT or OpenAI's GPT, just like off the charts, right? 62% in the green, currently using or plan to use. Nothing's really even close. Gemini, which is awesome product, you see on Anthropic, which is widely available through Bedrock and other places. Llama with open source, and you see it was interesting to see Databricks pop up. Amazon Nova, their proprietary model, and even Snowflake was kind of interesting. DeepSeek, not as big as you'd think, maybe given all the hype. Grok, same. IBM Granite, I was kind of pleased to see them pop up, a little bit, because they haven't really been, in the mix, at least in the mainstream. Cohere is really interesting because they're all about enterprise AI. They're not trying to compete with the big foundation models, and that's a market that's slowly developing. So I don't know. What do you make of this data?
It's really interesting. It's the first time we ran it. This, again, will be comped in 6 months along with all the other tranches we do. So we're not just trying to track AI, as you see, on just the metric level as a whole, but we're trying to really dig into the components of it. This particular one, again, was about the guys that are building and maintaining their own applications, which is why I think this LLM is so interesting. I agree with you. DeepSeek was probably the biggest one for me. I did realize that Snowflake and Databricks both have the ability to build and maintain apps in their own database ecosystem. So I think it was encouraging for both of those companies to see that people were using the LLMs embedded in there. But overall, yeah, dominant on GPT without a doubt. We also asked people if they perceived a difference in these models, and 72% said there's only a small differentiation. That's their perception of these different models. And the most common usage of them is fine-tuning a pre-trained model. That's what they've been doing. And cloud providers are still the primary source for language and foundation models from them. Obviously, OpenAI has its own name, but we all know how far it's backed by Microsoft Azure. So yeah, I agree with you. I think DeepSeek was probably the most interesting call out there. But yeah, interesting to be able to track this. And I'm really curious to see the data, how it changes in the next time when we can comp this.
So of course, the prevailing wisdom to your earlier point is that these things will commoditize. There's not a lot of differentiation. And then, of course, you see OpenAI go and do a deal with Johnny Ive's company and, for $6.5 billion in stock and to do some kind of integrated hardware and software device. And so it's going to be really interesting to see how that plays out. I do feel like, OpenAI has the innovation lead, and that sort of confers advantage to Microsoft, which we're going to show here. If you let's take a look at, Alex, at AI development platforms. And again, you see Microsoft, they really dominate here. Azure OpenAI service, of course, because they're, super gluing themselves to OpenAI. Then the Azure machine learning piece of that I believe that is built on Databricks, but I'm not positive. And then Azure AI Foundry, top three. And then you see Amazon Bedrock, which is kind of their, Model Garden. SageMaker is their historical, machine learning model. Google with Vertex, developer-friendly. Hugging Face is, and LangChain. You get down again, Snowflake actually shows up a couple places. Snowflake ML and Snowflake Cortex, they were kind of late to the game that they're popping up, as you see. Databricks as well. Watson X is in the mix. Oracle, Cloudflare, Red, everybody's in the game here. Erik, H2O AI, Sri Ambari's company. So a lot of optionality for customers, isn't there?
Yeah, there really is. And you get to see the citation drop, though, to your point about just how dominant, right, it becomes when you're talking about the Microsoft stack versus the others. But I think I hosted a dinner on Tuesday with 3 different CIOs and some investors all about some of this information and this data. And many of the actual CIOs in the room just wanted to remind all of us that many of them can't use any of these that are kind of public cloud oriented, that there's some data issues, compliance issues. So that's why I think there's so many in the game. So say you're using Databricks or you're using Snowflake and you already have your cloud data warehousing ecosystem. They allow you to build these apps and in their own orchestration platforms. So that's why I think it's important to have optionality, as you said. That's spot on. Okay,
let's take a look at vector search. That's something that if people thought was like the hottest topic in the world. Now it's sort of become a feature. But you see Microsoft and Mongo lead. It's interesting to me here. Microsoft Azure AI Search, okay, that makes sense. Mongo, in various surveys, even before they went GA, was given very, very high marks with their document database and embedded vector search. And you can see you going down the line, Elastic, Google Cloud, on and on, Amazon, Databricks, Snowflake, Oracle. Pinecone was kind of probably the most popular standalone vector search. I know Milvus, open source, I think it's a Chinese company. We actually use Milvus in thecubeai.com. And you can just see it's just a number, again, a lot of optionality. Interesting to see Cloudflare popping up. And the ends are smaller, but they're not They're not de minimis. I mean, it's actually, a substantial number of folks have heard of them, and, a decent number are actually using them. So your thoughts on this data?
Yeah, again, I think Redis was the one that stood out for me here.
Yeah.
I didn't expect it to be so high. I thought that for me was the kind of the most interesting takeaway on the vector database, and Mongo and Elasticsearch almost in a dead tie right behind Microsoft. I think it just shows how dominant those can be in their niche use cases. So I wasn't particularly overly surprised on this. But again, I think it's interesting to see the optionality, the amount of usage that's across. It's not just one player, right? It's not just here's my cloud provider and that's what I'm doing. So there are different use cases for these as well. So it's good to have options.
Yeah, and as we know, AI is not without its challenges, as we're showing here. I love this. What are the main technical, organizational challenges your company faces in developing its own AI applications? This is, again, an N of 600, so pretty substantial. Skilled personnel, data quality always comes up. How do I, integrate with legacy systems, regulatory and compliance? Budget constraints a little lower down, but it's still, 30%, citing that. Hard time scaling, culture. I mean, down the line, this is, it's not trivial. AI is hard, Erik.
Yeah, it's not easy. People think it's easy. It's not just a matter of connecting your database to an LLM and then telling you what it wants. Particularly when you're in an environment where you have massive amount of employees and what your use case is. Is it external facing? Is it internal facing? But on a larger basis, we found a trend that the larger the organization, the more likely they were to go ahead and build their own. And a lot of that has to do, we asked why, and it has to do with customization and flexibility. A lot of the stuff that you can just connect to, you really can't customize as well. And many of them said they're worried about compliance and security. So you really have to think about that when you're talking about building your own stack versus just going ahead and leveraging one of the vendors you already have. So cost efficiency was a little bit lower, and competitive differentiation also are reasons why people would rather go ahead and build these than buy them. But without a doubt, the number one problem they're having around that is it's still an age-old problem with data quality. So if you don't have your data, hygiene in the right place, you're not going to be able to do successful AI.
A couple themes here. George Gilbert and I wrote a post several months ago why Jamie Dimon is Sam Altman's biggest competitor. And the premise was that Jamie Dimon's got, 2 exabytes of data, whatever it is. It's proprietary data. JPMC is never going to put that proprietary data out on the internet so that LLMs can train it. Rather, in one of the predictions, Erik, that we made in our predictions post, you might recall, you and I, is that the whole repatriation narrative, which we never bought into, at least wholly, is going to shift to bring the AI to the data. And so that kind of brings me to my next point. Where are customers putting their AI? AI is following the data, and you can see that here. You've got, how does your company host your AI applications? It develops. This is 471N, most in the public cloud. And then I wanted to ask you about this. You got private cloud and on-premises, and then, much lower edge, co-location. A lot of people would put colos and private cloud and on-prem sort of in the same category, but I like that you guys are more granular. GPU as a service, that's like the CoreWeaves and the Lambdas. But what's the difference between private cloud and on-prem?
It's a good distinction there. I wasn't really quite ready to answer that one, but if I had to just go off cuff, I think there are still some people that don't have giant, huge data centers, which you'd kind of consider a private cloud. That's just for them. And then they have units that they're running just on servers in their own offices. So I think it's a matter of scale is the way to answer that. But we didn't actually offer that distinction in the survey. So the answer option was for them to choose whether they had their own private cloud that they were managing, or if this was a smaller, just on-prem, instance that they were running.
So I would interpret that, and I wanted to sort of test this with you. I would interpret both of those as on-prem, that the private cloud would be an actual cloud-like experience on-prem, mm-hmm. and then on-prem was, I think the fact that you differentiated, I think is good, because on-prem is like, it's our old legacy stuff that really isn't a cloud-like experience. It doesn't have, a common, experience across the storage and compute and networking and the control planes, et cetera. And our deployment is kind of legacy. And so again, the premise that we're putting forth here is you're going to bring the AI to the data. That data is not going to move into the cloud. A lot of it. I mean, a lot of insurance companies aren't going to put their claim system in the cloud. A lot of, financial companies aren't going to put their trading systems and their proprietary information in the cloud for a variety of reasons, security, latency, et cetera, et cetera. And so unlike the cloud movement, where the cloud had such much better agility, those guys are doing private cloud. They've got pretty good cloud experience, and they're going to bring AI to that. The problem is that those on-prem AI stacks don't exist. They're not mature. And so the banks that we're talking to are building their own on-prem AI, but they're having to do it yourself. I was just at Dell Tech World. They've got the Dell AI factory powered by NVIDIA, and, they're putting the whole NVIDIA stack there, and they're trying to build out solutions, but it's, it doesn't have the data stacks, all the tooling. It's evolving. They announced a deal with Glean. They announced a deal with Cohere. That's going to take some time to gestate. But so you've got this interesting dynamic, Erik. You've got all the tooling in the cloud that you can consume. You've got a massive ecosystem of data platforms, of governance platforms, of tooling, of security, of identity access, you name it, it's in the cloud. And so you can put that together with infrastructure as code, and your developers have access to all that. The analog doesn't exist on-prem in that private cloud. And to an earlier data point that we shared, the skill sets aren't necessarily there. So they lack the solutions, you lack the skills, so it's going to take some time. But it's going to happen over time. Your thoughts?
There's a lot there to digest. I want to go back to your point because it's interesting. Again, I hosted a few gentlemen just the other night, and one of them was a very large reinsurance company, and he flat out said, there's absolutely no way I'm building any of this in the cloud. It's just not happening.
Right.
So I think it was a pretty astute point. So again, we analyze these in large trends, and who's the winners, who's the losers. And I think sometimes we lose the actual use case. There's a lot of specific things that go into what is it being used for, what is my data governance, what am I allowed to do, what am I not allowed to do. So I don't think it's going to be a matter that the cloud will eventually win out because it has all that ability to do governance and identity and everything else wrapped around it. I think they're both going to win. And it's interesting that you mentioned Dell because when we asked people about their choices for on-prem solutions, they were in the mix.
Right. In fact, I think we might. I think I killed that data point, which was actually a really interesting one because you had.
I could go ahead and just give it to you then if we don't have the slide. But basically, it wasn't surprising that public cloud was the main hosting environment, primarily through Azure and AWS. But when we asked people that were doing it on premises, Dell and HP were the two leaders, without a doubt. And at a much smaller level, as you pointed out, the GPU as a service. It was a much smaller amount, but it's gaining some attention, and CoreWeave was the number one in GPU as a service as well.
Interesting. And so let's go to our forecast because I want to share this with the audience and with Erik. So this, Erik, is our AI only data center forecast. So it's all data center spend. So it's infrastructure. So it's compute, storage, networking. It's cooling, and basically, the build out of the core infrastructure. And this is just the AI portion of it. So we are in a data center supercycle. We use that term. Some people don't like it, but we feel like it really is a supercycle. And when we did this analysis, we don't show it here, but the data center build out business was about a couple of $100 billion. It fluctuated up and down. Nobody was building data centers during COVID. But maybe some of the hyperscalers were, but generally speaking, it was a couple of $100 billion, maybe 220 billion. And it jumped in 2024 to 350 billion because of that 180 billion you see here in 2024, which was the AI, acceleration. So, think about it. Extreme parallel processing went from, very, very small. We're talking about tens of billions to 180 billion overnight. And that was a lot of NVIDIA infrastructure, a lot of networking, a lot of data center builds out for power and cooling. And you can see the dark blue was the cloud. So Jensen, in his GTC speech, his keynote, laid out 3 vectors that we've mapped to, 2 out of the 3 here. AI in the hyperscale clouds, AI in the enterprise, which is on-prem, and then AI in robotics, which we don't show here, and that's going to take some time. But you can see here, AI in the cloud is today the dominant factor. That's the dark blue. But AI on-prem in the enterprise is the light blue. And you can see here, okay, it's much, much smaller, but by 2030, it's over 100 billion. So it crosses over the existing general purpose, data center architectures that are out there. So the point is, our premise is we're going to bring AI to the data. As you were earlier saying, one of your roundtable discussions indicated no way we're going to put it into the cloud. Now, of course, we heard that with the banks early on of the cloud.
We did hear that as
well. So never say never. But the difference in my view was that the on-prem experience was so deficient and it took so long, and it just made sense for folks to put stuff in the cloud, even lifting and shifting, and then started to do development there. I think that dynamic is different now because of that private cloud slice that you had. It's a much more capable infrastructure if those players like Dell and like HPE can attract an ecosystem of startups and actually build solutions, and other partners. Partners like that you don't really hear them partnering with, like a Mongo, or you mentioned Redis, or some of the open source, platforms leaning into that so that they have a richer on-prem AI stack and a richer ecosystem. I'll give you the final thoughts on that.
Yeah, it's interesting on that. I think no matter what, the database, data centers growth is there, right? Whether it's on the public cloud side or the other one. I wanted to ask a question on that. So where would that fit if we were buying like major SaaS applications? If I was buying Agentforce or, ServiceNow, Now Assist, do you roll that up into the public hyperscaler spend because that's where that's being hosted? Or I was just curious how that would break down, because what I'm seeing now is there is a very interesting dynamic where enterprise organizations are both building their own and buying. They're doing both right now. So they'll say, okay, you guys go ahead and build this, see if you could do it better. But right now I still need it. So I'll pay the $20 per user per month to get that functionality. And I've had people tell me that they plan to do that for at least a couple of more years because they feel the technology is still so nascent and it still has so much room for improvement. So what I found interesting about that total spend is it kind of combines both. And I think that's going to happen for a while. However, there will come a point where they'll make a decision on, all right, are we going to maintain this and host this ourselves? Or are we going to go ahead and keep paying that, yearly increase in the user fee? So right now, build and buy is happening simultaneously, but I don't see that happening forever. So there will be a moment where you're going to have to make a decision on which path you're going to take.
So the interesting thing about that is this excludes any SaaS. That's how massive the TAM is.
I got a feeling. Yep.
If you think about it. I mean, the TAM, in our discussions with Mark Benioff, George and I interviewed Mark Benioff several weeks ago, and we put forth a premise that Salesforce is trying to become the 4th hyperscaler, but a software-only hyperscaler. So they'll pay the COGS to Amazon or whoever the cloud service provider is, primarily Amazon, and they will, within their own Salesforce estate, harmonize the data, put it into the data cloud, bring in Tableau and Slack, and bring it to stitch it together with MuleSoft and all the other assets that it has. But they will try, we'll see how this goes, to federate Snowflake data and Databricks data and other data that lives in engines, and be that single source of harmonization using their technology. We'll see if they can pull that off, but that is kind of an interesting play. And Mark claims that the TAM for that is between $3 and $12 trillion, which is just mind-boggling.
I think that's really interesting. On our core spending intentions data set, as you know, Salesforce is the 4th highest cloud provider in our cloud computing.
Yes.
And that's not only in its spending intent trajectory, but also in its entire market presence, which is basically the share of our survey population. They're 4th in both the market share and also spending intent. So they are clearly on their way to doing that.
So what's going to be really interesting, and this ties to what you were saying earlier about some of the SaaS players, is you've got firms like Salesforce and ServiceNow and Workday and certainly Oracle and SAP building agents, agentic within their own estate. You've certainly got Salesforce trying with broader ambitions. And you've got other companies like Celonis trying to go horizontal, suing SAP because they can't get access to the back-end data, all the process logic and all that other logic. And so it's going to be really interesting to see if this plays out as stovepipes or, as Satya Nadella says, agents talking to CRUD databases and the SaaS layer goes away, or as Benioff says, no, that's just Clippy, you have to do the hard engineering work. There's probably some truth in both of those, and those worlds come together. But when I ask companies, well, how are you going to harmonize that data? Many, like Salesforce says, hey, we're doing the work, we're building a data cloud. That's obviously what Snowflake is doing and others. And the flip side of that is you've got Iceberg, open table formats, and you've got the likes of Google saying, no, AI is actually going to do that harmonization. And that's what Microsoft is claiming. So the truth is somewhere probably in the middle, whether or not we have, just like we do with SaaS, just stovepipes of data and application logic and business logic trapped, or whether or not we can unlock those. Clearly, the latter is what customers want. Yeah, so I'll give you the final line.
No, I think you're right. The latter is what they want, but right now it's easier to just go ahead and pay ServiceNow, Salesforce, Workday for their user while we get there. Also, just so you know, we do track all of those at the product level in these AI series as well. So it's not just the higher level metrics, but we'll be able to go ahead and see the attach rates that they have among their existing customer base, what the value of those are as well. So we can dig into that anytime you want, Dave, if there was certain SaaS players that you wanted to go. But yeah, right now, I mean, everything we showed here today is that AI adoption is scaling rapidly. But there is a need at some point to focus on ROI. You can't just spend like a drunken sailor forever and not actually measure the success. Right now, when we ask people what they are measuring, it's efficiency, which is great. It's nice to be efficient, right? You can get cost savings down the road through efficiency, but at some point you can't keep spending like this until you see some hard ROI. So I think that's the stage we're at. It's still very, very early.
Great summary, and thank you, Erik, always for the collaboration, and thanks for all the great data.
It's always good seeing you, man. Thanks for having me on.
You bet. All right, and thanks to Alex Morrison, who's on production and manages the podcast, and Ken Schiffman as well. Kristen Martin and Cheryl Knight help get the word out on social media and in our newsletters, and Rob Hoth is our EIC over at SiliconANGLE.com. Do some great editing. Thank you all. Remember, all these episodes are available as podcasts wherever you listen. Just search Breaking Analysis Podcast. I publish each week on thecuberesearch.com and also SiliconANGLE.com. You got a pitch? Email me at david.vellante@siliconangle.com or DM me at dvellante. Comment on our LinkedIn post. Check out etr.ai. It's unbelievable, Erik, how fast you guys are moving. Not only is it the best survey data in the enterprise tech business, it's the deepest, the broadest, deepest data science team that focuses really on enterprise adoption, and you guys move with the trends. So check out etr.ai. This is Dave Vellante for theCUBE Research Insights, powered by ETR. Thanks for watching, and we'll see you next time on Breaking Analysis.